latest Harpel Financial Group update. It has been a little while between drinks, so apologies about that. But hopefully the financial year has kicked off well for you all, and the calendar year of 2023 is going well. And wherever you are in Australia or around the world, if you're travelling, hopefully the weather's treating you well and all is good with the family and friends. What better way to kick off the next edition of the Harpel Financial Group update from our last one is to go through one of my favourite charts in the whole wide world, and this is the 2023 Vanguard Index chart. General in nature as always, this one, so yeah, seek personal advice when it comes to anything financial, and give us a buzz if you have any questions. But the cool thing about this chart and what I love is, I think I'm a creative mind at heart, is the picture and imagery side of things, to be able to show patterns and show what things do over time, even though we deal with numbers all the time, and yet numbers are great. But I feel like the pictures paint 1,000 words, and they tell a really good story to everyone to be able to see what things have done over a history of time. And I guess the thing that we always get asked as advisors, and questions that clients ask is, is the market risky? What happens to the money? What happens if it goes up or goes down? When's the best time to invest is always a really common question we get. And I think the answer to that is there's never a best time, but it's essentially it's when you're ready, when you feel comfortable, and then when you do make the decision to be able to invest funds, is you stay the course and you ensure that you keep the path along the journey well maintained and looked after, and you don't get crazy happy when things go great from a market perspective, but also at the same time you keep an even keel when things don't go well, because the one thing you can guarantee with the history of the market is there'll always be something. And essentially this chart talks to that. It talks about all the different things that have occurred in the dot points here over the period of time, and what's happened to the markets, and all the ups and downs that we've experienced. So, and the cool thing about this chart here that I love to see is the growth rate of $10,000 over that period of time, so 1993, all the way through, with the ups and downs throughout all the cycles, and the outcome for US share outcome and percentage-based return, and Australian share outcome and percentage-based return as well. So that's just investing the $10,000 and not being silly, not pulling it out, not making rash decisions, but just leaving in there and let the beauty of compounding do its thing and do its work. The other thing I'll put in this attachment today with this email is a video and a YouTube link of this Vanguard. It's about a 145-minute video, and it talks about what happens when you add regular investment to that as well, and what happens to the compounding effect of adding $250 a month from 1993 onwards, and $500 per month from 1993 onwards to 2023. Obviously, historical returns are never a guarantee of future returns, but it's a really good gauge and indicator to see what things happen. And I guarantee, there's always going to be adversity and things that come up from a market perspective. So the cool thing about this graph and this chart is, I can attach this to the slideshow today as well in the email that I send you through, and you can print this off. I know I'm going to print it off and put it in the kids' rooms. Probably print a nice A3 colour copy of it. Whether they want it in their rooms or not is a different story. But I love the chart, and if they can learn a little bit from it at a young age, maybe that might help put them in good stead moving forward in life. So whether you've got kids or grandkids, that might be something you can show them or they're interested in, or the video, the YouTube clip that I'll send you as well, feel free to pass it on, because I think it's pretty valuable stuff. The other cool thing about this chart as well is it talks about the historical returns from 1994 to 23 of all the different asset classes that make up stocks, or make up portfolios, I should say, and the average outcome of returns over the period, your best years and how many times they've had their best years, and then the worst years and how many times they've had their worst years over time as well. So there's a bit of a correlation there with growth assets having better double-digit outcomes, and your more defensive assets being a little bit more down the single-digit to lower double-digit returns and averages as well. And then you've got your cash here, which is interesting. The safety haven or safe haven is to run to cash, but it's been the negative performer the most out of all the different asset classes over that period of time. But anyway, it's just a really cool graphic and imagery that I like to sort of talk to, I think, and thought I'd help pass on to you guys. And it's probably one that I'll come back to year after year, because I just love this chart. I love the pictures and the imagery, and keen to hear your thoughts on it and see what you think. I'll attach the copy of these slides into the email that we send out as well, and also that video, that YouTube clip that you can have a quick peek of as well. Any questions, feel free to reach out to us at Harpal Financial Group. Always here to help, and hope you're keeping well and safe and happy. Look forward to speaking to you soon. Cheers, guys. Bye for now.